South Africa's total industry new vehicle sales increased by 20% year-on-year in July to 41,367 units. That's according to the National Association of Automobile Manufacturers. If you strip out sales from Amalgated Motor Holdings and Amalgated Automobile Distributors, which report separately, sales rose by 15.8% to 35,500 units. That's compared with July as well. Joining me now to analyse those numbers are Nico Vermeulen. He's a director at NAAMSA in Studio, Sydney Soundy from Absa Vehicle and Asset Finance. Gents, thanks for coming in. Sydney, does it look like we're losing a bit of momentum as we head into the second half of the year? Because we really started the year on a strong note. Most months we've had quite strong sales. The month-on-month increase not very high at this stage though.
Yes, if you look at the role that the financial services industry play in regard to extension of credit, we can see that in fact there's a slight improvement in the extension of credit. It's still at a low rate though, because the quality of applications that we're receiving at this point in time is not as good as we would have loved.
What do you mean the quality is not as good? Do you mean people aren't putting down large enough deposits, they're looking for extended terms for those vehicles? Exactly
that. We see people applying for longer term periods in order to afford the repayments to the loan. We're also seeing an increase in people not paying for deposits. So people applying for vehicle finance, not paying deposit up front.
Well, we're going to get to the quality of that financing in just a moment. Let's bring Nico in here. Nico, how are you seeing the sales growth that we're seeing coming through this year so far? Because we did start on a very strong note. We're still growing quite nicely. But do you think as we go into the second half of the year, we are going to lose a bit of that momentum?
Well, I think the latest sales figures confirm a mixed performance. We're seeing relatively strong and buoyant new car sales. And I do believe that the World Cup had quite a bit to do with it, because there was quite significant car rental demand in the first quarter of the year. But we're beginning to see weakness in new light commercial vehicle sales as well as heavy truck and bus sales. And that suggests that the growth momentum in the commercial vehicle sectors, which are probably closer allied to economic activity levels, are definitely beginning to show signs of a slowdown. So in aggregate terms, we do see a moderation going forward for the balance of the year. And it's also apparent, if you look at the first 7 months of the year, the improvement was 23.5%. And then, of course, month-on-month, corresponding month last year was only 20%. Again, that implies slower growth.
Of course, Sydney, 23.5% year-to-date compared to last year. You're looking for total sales of around sales growth of about 14% for this year. So that would suggest then we are going to see a bit of an easing off, particularly from your perspective.
Yes, Stephen, there is an easing off. The only issue is that in terms of how we ease off, we're looking more at the jockey, the person applying for the loan. So in terms of repayment to loan, we're still keeping the same flat percentage. The issue really is in terms of allowing for more longer term and for less deposits. That allows for that flexibility to at least spare the market on.
Of course, Nico did highlight the commercial vehicles. We have bakkie sales, that's light commercial vehicles, down by 2.7% year-on-year. It's actually shrinking over the year. Trucks and buses up by 2.7%, but down 6.6% month-on-month. Are you seeing that from your commercial or business customers that they are applying for less financing for those vehicles?
Yeah, if you look at the area of business that we are involved in, which includes the light commercials and medium commercials in the small business sector, we already can see a softening of the demand in that area.
Was that something you expected though?
I think it was expected. As Nico indicated, in terms of the second half of the year, we expected that from month to month the growth is not going to be as high as it was in the beginning of the year.
Well, Nico, you came out with some stats yesterday. It was a review of business conditions from NAAMSA. Jobs being created, 427 jobs created in the industry in the second quarter of the year, and employment has grown by about 5.4% since the end of last year. Does this suggest to you perhaps that automobile manufacturers and vehicle manufacturers are getting a little bit more confident about the prospects going forward and are starting to build up their workforce again?
Absolutely. I think employment levels, of course, are closely allied to output, a number of units produced. And that is, I think, where export sales have made a major contribution. Because if you look at the performance year to date, of vehicles produced for export markets, that's up well over 40%, 41.8% year on year. So that is significant, but of course that is a function of the ongoing strength and sustainability of the global economic recovery. And there are some uncertainties and question marks over the sustainability of that improvement, particularly in Europe, and that could have implications for exports over the medium term. But in the short term, there's every indication that export sales will continue at a high level, and that, I think, will reinforce employment levels at current levels, and there may even be further improvement marginally in the second half of the year. But overall, 1,600 jobs were created in the first 6 months of the year. And I think the other sector is one of the few sectors in the economy that's currently creating employment in South Africa.
Of course, there must be some concern among those companies who are exporting or manufacturing to export with the strength of the rand. We've been chatting about that in studio, currently trading around 7.28 against the dollar. So significant strength coming through for the rand this year. Is that going to hamper our exports going forward?
Well, our information is that most of the export business is contractual. And these are contracts that have been awarded by the parent companies in Germany, Japan. So they will run the tenure of their contract. There is, of course, an allowance for adjustments to the amount of units exported depending on demand in the market of destination. But by and large, I don't think the rand exchange rate has a major impact during the tenure of a particular contractual production arrangement.
Well, Sydney, you were chatting about the quality of credit you were granting to customers not putting down very large deposits. In fact, I think over half of them are applying for financing without putting down any deposit whatsoever. Is this building up risk in your business? Are you granting those? How many applications are you granting and how many are you turning down?
Yeah, look, if you look at growth, excuse me for that, we've grown by something between 20% to 40%, the range between new and used. So on the used side, we've grown a little bit, although in terms of the used to new car ratio, we're seeing a contraction there. So we're looking at both in terms of the asset being financed, at whether we're financing a new used vehicle, but at the same time looking at how big the deposit should be. When it comes to the person that applies for the loan themselves, we're not relaxing any requirements in terms of their ability to repay.
How about interest rates? We've had all of those interest rate cuts, I think 550 basis points since the start of the cutting cycle, and that must have helped customers a little bit though. Debt to disposable income still remains very high, around 78%. Do you think more interest rate cuts are warranted in a market like this to help inspire customers to buy more?
It's a controversial question.
Or make it easier for them to repay you.
Yeah, look, it's an interesting but controversial question. But look, for us, anything that can spur the market on without increasing the risks that the bank takes, we will welcome. So I'm not going to really venture into the economic rationale either to keep the interest rates or not. I think I'll leave that to the economists.
Nico, just quickly, outlook for the rest of the year, all things being equal, do you think we could see that 14% growth that Absa is predicting for the year?
We're talking about 14.5% to 15% growth in aggregate sales for the balance of the year. I think the new car market will grow better in relative terms than the commercial vehicle segments. But yes, there's no reason why domestically the market shouldn't expand by about 15% for the year, and there's no reason why export sales shouldn't grow in volume terms by about 30% for 2010.
Nico, Sydney? Sorry,
I think, Steve, if you look at what Nico is saying, in our case, the last year, in terms of credit extension, we're very tight. So if you compare the growth that we're experiencing between 2009 and the current year, because of the relaxation that I'm talking about, as I said, we see about 44% growth from last year in our own business.